What's going on, guys? It's GBP baby, and in today's video we're going to be looking at the importance of higher time frame analysis. Now, in the previous how to read charts episode, we spoke about liquidity, so hopefully you got a grasp and understanding of what liquidity is. And we need to remember that price is fractal, so the concepts I spoke about and taught in the previous video applies to this video very much so. We're going to be looking at high time frames, so we're going to be starting with the monthly and we're going to work our way down. And the reason I'm doing it now especially is because we've just had FOMC. I did actually conduct a trade and I've recorded it all, so I will make sure to link that video at the end of this and in the description for you guys to check out. But today really allowed me to learn and understand the importance of knowing what the high time frame is doing, because you can grasp and anticipate big moves such as FOMC, where it's likely to draw to, and how to get in on those aggressive moves. Because when price is reacting off those big higher time frame PD arrays, such as from the monthly or the weekly, like what we saw today during FOMC, it's a lot more easier to understand price action. So we're going to get straight into it. I'm going to try and make things as clear as possible as to how we should be laying out our charts. What I'm going to do is I'm going to mark out all the PD arrays that I see on the monthly that I have my eye set on, and we're going to slowly build a list of what we're looking at and all the things. And then you'll find that once all of the PD arrays are in line on one side of the market, like let's say all the PD arrays are showing a bullish indication, when price then reacts to those PD arrays, you'll see how large of a reaction we get off it. So yeah, let's get straight into it. First, I'm going to start with the sell side liquidity that we can see has been grabbed here on during September and October. So I'm going to mark this out as sell side liquidity, and because it's being grabbed, what I like to do is I like to grey it out. So I'm going to grey it out, and I'm also going to make this the thickest. And the reason I'm doing that is so that when we drop down to lower time frames, we can actually see what we're looking at. So this is sell side liquidity. I'm going to also put that on the right, and we know that has been grabbed. Why is this sell side liquidity, guys? Well, it's a swing low. It's a monthly swing low, and you can see our price stabbed into it once, twice, found support, and then traded higher. So this is a monthly sell side liquidity which has been grabbed. Now we need to look for bullish PD arrays. So judging off where we are now, what kind of bullish swing highs and PD arrays do we see that we want to trade into? Well, we have this swing high, which we haven't yet traded into, and we have this swing high, and we also have this swing high. But in terms of the sell side of the curve, so we have a curve here, we have sell side and then upside. So we should be looking for the sell side. We should be looking at swing highs within that side. If you remember the previous video, I was explaining that in there as well, and I was explaining what liquidity is. Remember, we have sell stops residing below here, and we'll have buy stops residing up here. So what do we write? We can make a line here, and we can call this buy side liquidity. So that's what we're going to do. And you'll notice how similar this is looking to the previous video I made, but you'll slowly start to see how important these levels are when we drop down to low time frame, running right down to the 5 minute, and understanding how these, looking at the reactions to these levels. So buy side liquidity, I always tend to have as a dark blue. So we'll do that, and I'm also going to make the line a dark blue. And let me just put monthly actually. I'm going to put an M for monthly. So that's monthly buy side liquidity, and that's monthly sell side liquidity that has been grabbed. Then another thing I want to bring our attention to is the 50% level of this wick. That's what we call consequent encroachment. We also traded down into that. Well, we just about missed it. When price fails to reach consequent encroachment, such as here, it does suggest a level of bullishness. So I'm not really too fussed about that, but it is nice to see that when price fails, it's usually hinting that we're bullish. Don't get me wrong, price can trade to that 50% level, and it can even wick just below it and give us what ICT calls a mohawk. However, when we have a nice gap like that, it's nice to acknowledge that. So what I'm going to also do is I'm going to mark out the consequent encroachment like so. I am going to make this one thinner. Let's make it this pinkish color. Let me make sure it's lined up on the right level. 103, 5.097. We are looking at Euro USD, by the way, and that's because that's where I've done my trade today, and I think it's a great example. And we're going to put monthly consequent encroachment. And these levels we anticipate price to be referring to. If, say, price traded through this level when it was wicking down, or let's say we traded through it, that's fine, but let's say it closed below it. If we wicked down and closed below it, well, obviously this would be a down candle, wouldn't it? But what I'm saying is that price is supposed to respect these levels, and that's what we're witnessing. So let's just leave that like so. So now we have a monthly chart with buy side liquidity resting up here to reach for, sell side liquidity which has also got tapped. We do also have this fair value gap, but because this month hasn't closed yet, I don't want to really bring our attention to it. However, I do want to bring our attention to this monthly fair value gap. Now, yeah, let's I'm thinking whether to it's going to get quite messy. What I'm going to do is I'm just going to keep the outline. So let's get rid of the inside of the box, and I'm going to make this box we'll make that pink as well. And we're going to thicken it up. And we know that this is a monthly fair value inversion fair value gap. Why is this a monthly inversion fair value gap? Well, we have delivery on the downside where the fair value gap was created, and then price traded through it, completely disrespecting it, and then we came down and found support in it. As soon as this candle trades through that fair value gap, because remember, before it trades through it, this is just a normal fair value gap. So as soon as we traded through it, this is now an inversion fair value gap. So we anticipate this fair value gap to act as support. If we never traded through it, we'd anticipate it to act as to find respect. So when we were on this month here and we were trading into this fair value gap, I would have been looking out at that 50% level. This 50% level here, I would have had my eyes on it, and I'd be looking at how is price reacting to that level. Is it going to respect it? If that was the case, then I'd then expect lower prices. Or is it going to trade through it? Obviously, we traded through it. And then when price comes back to it, I was watching the same level again. Is price going to respect it? And you can see clearly we did. But as we drop down to the lower time frames, you'll be able to understand that a lot more clearly. So now we have how many? Like 4 different PD arrays on our monthly chart. We have the monthly buy side liquidity. We have the monthly inversion fair value gap. We have the monthly consequent encroachment, which was respected. And we have the monthly sell side liquidity, which has already been grabbed. Another thing to take note, look at the volume. Volume continues to respect, to stay above, these levels. Don't get me wrong, volume can close below it, but when the candles actually close below these levels, it shows a lot more bearishness. So now that we have these on the charts, we can drop down to the weekly, and we can see that all of those PD arrays that we had marked out are now translated down onto the weekly chart. So we have that same sell side liquidity residing here from the monthly, same consequent encroachment on the monthly, same inversion block on the monthly, and same buy side liquidity up here that I have my eyes set on. Now on the weekly, we're going to do the exact same thing. What can we see and what do we anticipate? Well, we'll start from the bottom and work our way up. So here's that monthly sell side liquidity. We stabbed into it once, stabbed into it twice, stabbed into it a couple times on the monthly, but you can see how we're constantly finding support and volume turned around at this level. More specifically on the weekly, that monthly consequent encroachment that the monthly candle didn't trade to, the weekly candle did, right there. So if we look at the if we look at the close of this candle, look in the top left corner here. If we look at the open of that candle, you can see that it says 1.05087, and you can see that the monthly consequent encroachment was 97. So that's only 10 pipettes, I believe. I'm not sure, but what I'm saying is that price is continuing to respect that level, and then what happened? We trade aggressively back through the candle, starting to trade higher, which is lovely to see. We then find support one more time on that sell side liquidity level, which got grabbed here, and then we trade higher. Now, is there any fair value gap in here? No. So we wait. Remember, at this point, we were anticipating this buy side liquidity to get drawn to. First, we have that monthly inversion fair value gap. Remember, I said first I'll be looking at the midpoint. How does it respect it? Yes, we turn around at it, but you can see that we find a nice level of support within it, and then we trade right through it. So there's nothing to be too concerned about there. But as this candle gets informed, what I'll be looking at this point will be this Wix candle. So let's look at the 50% level of that. Consequent encroachment, exact same thing as last time. And this time it'll be a weekly consequent encroachment. We'll make this, and then we're going to type weekly C.E for weekly consequent encroachment. And what I'm also going to do, just to make things a little bit more interesting, is the 25% levels as well. What you'll find is that when price respects the 25% levels, it shows a level of bullishness. So I'll speak more about this as we drop down to the lower time frames, but when we're bullish or bearish, seeing the 50% level get respected is one thing. Seeing that 25% level get respected too shows a lot more of an aggressive nature in the move. So this is 25%. So let me just write weekly 25% consequent encroachment. And what you'll notice is this wick respects that, and this one does too, to the midpoint. Technically, there is an implied fair value gap here. I don't want to get too much into it, but the reason for that is because there's only down delivery here. Here, there was down delivery. Yes, there was up delivery technically on this wick, but overall, there's only down delivery. So there is actually a implied fair value gap here. So the way that we found support on this is also not surprising to me on the weekly. Implied fair value gaps, they're one of those things that you have to kind of train your eye to see. They are quite complicated because this is not just easy as explaining it, but it's definitely an implied fair value gap, as in we've traded through it, closed above it, so now I want to see it act as support. You can see we traded to the bottom of it, but look where the volume resides, right above it. So there's respect there. So what I'm going to do is type in weekly implied fair value gap. And technically it's an implied inversion fair value gap, so implied IFVG. Why is it an implied IFVG? Why is it an implied inversion fair value gap? Because delivery on the downside, we expect it to act as resistance. The first time it hits it, it does, but then we trade through it and close above it, so now it should act as support. Does it find support? Yes. So let's carry on looking at the weekly PD arrays. You'll find, again, same sell side, buy side, external, internal liquidity. So if we go back to the monthly really quickly, you'll see that this liquidity residing here would be on the monthly is classed as internal liquidity, and that's because it's within this range. From this high to this low, this high is within this range, so that's internal liquidity. If we go to the weekly, this is still internal liquidity. This would be considered external liquidity. So what we're doing now is we're starting to frame external and internal liquidity. So let's mark out this high on the weekly, and that will be a weekly buy side liquidity target. I hope everybody's following along okay, because this is very complicated stuff. So we have that weekly target. Another thing to take note of is we have another fair value gap on the weekly as well. And you'll see how price actually closed this fair value gap in and then turned around. But it turned around at the monthly inversion fair value gap, where we anticipated price to trade away from. This block here is actually a bullish order block as well. So what I'm going to do is I'm going to start with this bullish order block. This is what you call an propulsion block. A propulsion block is a block that's created that trades into the previous order block, that when price comes back down to it, we expect price to propel. And that's why I was able to predict the FOMC movement so well, because I was aware that this propulsion block would cause the price to propel higher. So what I'm going to do, I'm going to mark out the open of this block. I'm going to make it black, the line, and I'm going to call it a weekly propulsion block. Another example of where a propulsion block would be, in case you guys are struggling to understand, would be, say, here. So we have an order block, we trade higher, we take out these highs. When price comes back down to this order block, we anticipate price to propel from that level. Price trades into that level. And then what happens? Price propels higher, taking out these highs. So I hope that makes sense. The same can obviously be said on the downside. Let me try and find an example for us really quickly. Even here, so here we have a bearish order block. When price comes back to it, what happens? Price propels away. And remember, these are weekly levels and these are big ranges, which is why when price refers to these levels, and why we're doing this right now, when price refers to these weekly and monthly levels, we get big reactions and strong reactions, and that's how we're able to anticipate the market. So this weekly propulsion block, we'll just put on the right, we'll make black, and we can draw that out. Obviously, we have this fair value gap, but it's nice to see that that got filled, and we know that we're anticipating a reaction here. Now, this fair value gap didn't need to get filled. We could have simply traded into it a little bit and still continue to trade higher if we were very bullish. However, we allow price to reach this order block, and if we were to enter, say we were trading on the weekly, we could simply put a buy position here, put our stop loss below the order block, and then put our target either up here or up here. So a nice, long term, let's say that you don't want to day trade or you want to do longer term trading, we put your buy here, put your sell stop there, and as soon as price comes down, obviously it'll trigger the limit, and then we'll just hold on for the trade until it runs into its buy side. One thing to take note of though is this bearish order block. This is a bearish order block, so I do anticipate price to find resistance here. But remember, what's the monthly telling me? The monthly is telling me that there's buy side liquidity up here, which is why I anticipate now I want to see price trade through this bearish order block on the weekly. So although it's there, and although we might find resistance there, I want to see price come up here because the monthly is telling me that's where price is. So this is how I'm able to understand where price is likely to draw to. Is there anything else here I really want to look at? No. Right, so now we've got a weekly propulsion block. We've got the weekly buy side liquidity that we're aiming for. Obviously this fair value gap, which we now delivered on the downside and the upside. So the top of this fair value gap, what I'm going to do is I'm going to mark out the top of it. I want this to provide support now. Why? Because we've traded through it on the downside and on the upside. So this should now act as a bullish fair value gap high. So let's put weekly FVG high, because that's the high of a weekly fair value gap that we've now traded through on the downside and the upside. And so long as this week closes above it, or from now on in general, I want to see price every time it dips into it to find support to push higher. Because remember, our goal is to get to this buy side liquidity and weekly liquidity. Let's go down to the daily now, and you can see how our charts are full of things now. So let's go through everything we've got that are telling me that price is going to go higher. I'm going to make a list. So on the monthly, let's make it smaller. Monthly we now have. Let me start on the monthly and do this. Actually, that would make sense, wouldn't it? So I've made a list now of everything that we're looking at. So on the monthly, we have sell side liquidity that's been grabbed down here. We have the consequent encroachment of the fair value gap that's been respected. Where was that? Where did that happen? Right here. Remember, this is that box. And we have untapped buy side liquidity resting up here. On the weekly, we have an implied fair value gap respected. Where's the implied fair value gap? Right here. Why is it respected? Because volume stayed above it. We have a bullish propulsion block respected. And when I say a bullish propulsion block, that's this block. And how do we know that it's been respected? Because the 50% level off that bullish order block, that's what you call mean threshold. That's why I've got that in brackets. Price shouldn't trade below that. And you can see how we didn't even manage to reach it. And what does it mean when price doesn't even manage to reach mean threshold? It means we're bullish, very bullish. Don't get me wrong, it can trade into it and it can get below it. That's fine. We can allow for that, which is why our stop loss will be, below the order block itself. But it's nice to see that price respected it, and then look at the reaction that we're having. But we'll look more deeply into that on the daily. And we have untapped buy side liquidity also on the weekly as well. So now we go down to the daily, and all of these will now translate down to the daily time frame as well. So now that everything's been drawn on, we have this weekly fair value gap high that I'm going to keep my eyes on. And remember, we're still aiming for this buy side liquidity up here. So the daily, what can we see? Well, obviously we've got a fair value gap here, but we already know that's a fair value gap because that's a weekly fair value gap high. So we need to be looking at this little price action because this is the current trading range we're in. And what do we see on the daily? Do we see any targets? Well, obviously we have the weekly buy side liquidity, but first we have this beautiful fair value gap that we're likely going to want to trade into with this bearish order block as well. So what I'm going to do is I'm going to draw this out as our target of the daily. So this is a daily fair value gap that price is going to want to fill to deliver efficiently. So we've got daily fair value gap. Do we have a breaker? Yes, we do. This here is a breaker, low, high, lower low. So this is the last up candle before the down move, before the up move. So this level here is technically a breaker. And what that means is that price can draw down right down into that level and then still continue higher. So we should draw this out as breaker high. I'm going to make it much thinner. Daily breaker high. But when we drop down to a lower time frame, you'll be able to see that much more clearly. I'll explain more clearly what I mean by this is a breaker high. This is the last up candle before the down move that moves higher. So this is the last up candle before the order block basically. So this is a bullish order block. and this is the last up candle before that bullish order block formed, which means that price can refer down into this and still continue to trade higher. Yeah, because this is our day now, like this was literally FOMC today, there's not really much to say, but what I am going to talk about is this bullish order block. So once this candle traded through this, once this candle traded up and took out this swing high and this buy side liquidity risk line up here, this down candle now becomes a bullish order block. And what we can do is we can treat this bullish order block the same way we treated that weekly one. So we can look at the consequent encroachment of it, and we want to see if price can respect that level. So consequent encroachment, well, it's going to be mean threshold, sorry. When it's an order block, it's called mean threshold. So that's daily mean threshold. So we can draw that out. So once we drop down to the 4 hour and the 1 hour, we'll be able to see that level very clearly. Sometimes you're probably going to get confused why I'm sometimes using the bodies and when I'm sometimes using the whole wick, when the whole candle. I use the whole candle when there's if there's barely any body, if there's hardly any wick, then I'll use the whole candle. If it's a big body like this, then I'll likely just use the body like I just did then. Let's take a look as well how we traded down. Remember, we have a weekly propulsion block. Look what happens when price trades into that. We trade right down into that, and then look at the reaction. Straight away, trading away from it. Price comes down one more time to this day. Where does it come down to? 50% level of this wick. And this is the mohawk I was talking about. We're allowed to trade to that 50% level. So we have another consequent encroachment on that wick, on the daily wick. And we anticipate, again, on this day, as we were trading down there, I'd be watching this level. Okay, are we going to respect it? If it trades through it, we're likely going to head lower. If it respects it, we're definitely going higher. Look what happened. We respected it. And then, as you can see, price propels higher. But let's just write this down. Daily consequent encroachment. I'll put C.E for now. Hopefully you guys know what I mean. And I hope everyone's following along. Another thing to note, this is also a bullish order block here, and it's nice to see that we actually traded down into this wick. And what you'll find is, the fact that we trade, yes, this is a weekly bullish order block, but this is the daily order block, and price managed to reach down into that, which also happens to be that 50% level of that monthly inversion fair value gap. So all of these things we can anticipate happening, But I'm just going to mark that out just so that we know that that's a bullish order block. So what do we do now? Let's say we're still on this candle. Let's ignore what's all happened here. We'll now drop down to the 4 hour and we can have a better look. So here's everything on the 4 hour this time. There's that daily consequent encroachment. You see how price respects that. There's that bullish order block I was talking about. You see we touched that on the daily. There's that daily breaker high that I'm anticipating. I'm not necessarily anticipating price to refer back down into, but price can trade that low. So when price does retrace, which it eventually will, into this massive liquidity void, price is allowed to come all the way down right into this entire candle. So that's something we need to anticipate for future price action. Here's that daily mean threshold. Now look at how price stacks on top of it. So we trade higher. What gets created here? A order block, bullish order block. Obviously, right before this was FOMC, by the way. But right before all that, this is not a bullish order block as the high hasn't been taken. But we anticipate price to continue to support this level. And what we see is volume remains above it. Yes, we're wicking down there a few times, but you can see how we're continuously respecting that level. So what can we see on the 4 hour? Now this price action isn't the best to look at. It's not very pretty, is it? But we can see a nice fair value gap here. We can't ignore that. And why shouldn't we ignore that? Price traded through it once here, traded away. Now we're looking to see, does volume continue to respect it? Yes, it does. Yes, this candle trades down to it one more time. But as soon as it trades away like this, like it touches the top of it and leaves it, it shows that this is continuing to act as a bullish PD array. So we can put bullish 4 hour fair value gap. We have this. If we anticipate this to be an order block, like if we want to see price treat this as an order block, what should we be looking at? We should be looking at mean threshold. So let's draw out mean threshold. And then again, on lower time frames, I'd be looking at these levels, saying, okay, how's price treating it? Don't get me wrong, it's wicking through them multiple times, and the wicks do the damage because it's accumulating orders and accumulating stops. But on the 4 hour, you can see our prices continue to respect and respect and respect. This level here is also a mitigation block. Is it this level? This wick is a mitigation block. This is the last high before. So we have a low, we have a high, we have a higher low, and then we break higher. The reason I'm looking at this high is because it's an up close candle. So I'm looking at the last highest up close candle before the move lower, before the move higher, basically. So that makes this level here, this block in general, a mitigation block. So price can come to that to mitigate, and you'll see that's what is happening here. We're coming down into that level, which is also 50% of this. So you can see how there's lots of little PD arrays that are constantly getting respected. One I didn't add to my list actually. Let's get our list back up. So yeah, let me go back to the 4 hour, and I'm going to just run through the list now on the what we've seen on the daily. So on the daily, we have consequent encroachment respected. That's here. That's a daily consequent encroachment. We have a mean threshold traded through and respected. What mean threshold? This daily mean threshold here. We traded through that on this candle. Once that closed above it, price continued to respect it. Volume respected it. We have trading above an inversion fair value gap high. That inversion fair value gap high, where is that? Is this right? That's my bad, guys. I had it messed up. So sorry. Not traded through an inversion fair value gap high. That was for the weekly. We have a bullish order block respected as price traded away. Where's that bullish order block? That's that level here. Remember, on the daily. And we also have a swing high violated, this daily swing high, and that got violated on this wick. So again, we're starting to see things start to stack up. What I'm going to do now is I'm going to go to the 1 hour, and you can just see from basically anything below the daily. Yes, you can continue to draw out everything, but it'll get very, very, very messy. It's best just to have the daily levels marked out. Obviously, we have the weekly all the way up to the monthly marked out, but it's nice to see and important to see where price is going to be drawing into. So let's look at the 15 minute and see how we could have got in on this massive FOMC trade like I did in an execution. So we have that 4 hour fair value gap. This was CPI, price respected it. We traded higher. And then you can see we consolidated right through to FOMC. So between CPI and FOMC, there was a lot of consolidation. Price came down, tagged this level. So as price was trading down into this, I was watching it. Okay, is it going to trade through it, or is it going to respect it? Price shows a willingness to trade away. Why? Because we're continuously closing higher. We took out this little swing high here. And what are these dashed lines? I have a lot of dashed lines here, guys. Let's see. Right, so this is where we start looking at our daily PD arrays. I don't know what that dashed line is. Let me just look at that. That's the 4 hour mean threshold. Right, let's get that written out as well. 4 hour. So we're going to go back down to the 15 minute. So now we have two levels. We have the daily mean threshold. Do we trade above it? Yes. And we close above it. Now I'm anticipating this to continue to act as respect. And then we also have this 4 hour mean threshold. So you can see where we find support on that 4 hour. Trade higher. This is lovely. As we trade higher here, this was during New York on the Wednesday, we're also taking out relative equal highs. So this is where context comes in. We have all of this buy side liquidity to get taken. So that, remember, this is a good idea to refer back to my previous video. Buy side liquidity. Why is the buy side liquidity above here? Because there's relative equal highs. And remember, liquidity, the aim of this market is simply to match sell side with buy side and buy side with sell side. So where's the sell side? Well, we grab some here, we accumulated some more here, and then we let go of some here. But remember, we still have all this imbalance up here to be trading into. So that's one thing to take into account. But we let go of that, then we trade down. And as we were trading down, this is where we start looking at the 4 hour mean threshold. Is it going to respect it? Consolidate, we come down. Yes, there is technically a breaker here. Low, high, low, low. So this candle, wick, acts as a breaker. Look at that. Do we trade to it? We don't even manage to trade to it. Shows a lot of bullishness. We move higher. Price wicks one more time down, and then blast off at obviously the 2 p.m, which is mean threshold. 2 p.m, which is FOMC. But what I'm going to do is I'm actually going to go to the 1 minute, because if we wanted to get in properly, that's this is the time frame we'd be using, and we are going to bring this to an end because this has gone longer than I anticipated. So here's the buy stops. What we see in here, relative equal lows. And remember, this links to this links to the last video in this series. If you haven't watched that video, go and watch it, because you need to understand what I mean by sell side and buy side liquidity. So now what do we have? We have buy side liquidity taken. We have sell side below these relative equal lows taken. Price comes down to our level that we've had our eyes on, the 4 hour no, this is the 4 hour daily mean the daily mean threshold, and this is that this was that breaker wick, wasn't it? On 15-minute breaker. But you can see how I'm breaking down price right from a high time frame right down to the lower time frame. Now I want to see, is there willingness to go higher? Well, we instantly trade higher, continue to run. As we pull back, I'm looking at this fair value gap. I'm looking at this level. Price can trade down to it. Does it want to trade down to it? We don't even reach it, so we failed to reach that. And this is I can't remember the exact price entered in, but I'll link the video of the trade execution. There's also relative equal lows here and here, by the way. And you can see our price trades one more time into this consolidation. This is the original consolidation, and then this was the 2 p.m. when FOMC took off. If we wanted to enter really crazily, which I did actually kind of do on my in the video, as soon as this swing high got taken out, because this was the last relative swing high, significant swing high. Again, this is in my series. Look at the significant swing highs. When this got traded to and closed, as price was pulling back into these fair value gaps here, we could have been buying all that. And what's this? This is a propulsion block. Remember, we just spoke about those on the weekly time frame. So what do we anticipate when price trades to a propulsion block? We anticipate propelling, and that's what you can see. And we propelled right up into our targets of this swing high on the 4 hour, and then we're working our way up into that daily fair value gap that we had up here. I hope you guys found this insightful. That was a full breakdown from higher time frame to the lower time frame, and in the trade execution video I didn't go into that much detail because obviously it took a long time. It took me 30 minutes to go through all that, but that's the kind of thought that's going through my mind. Obviously it doesn't take that long each time. You get quicker. The more you do your back testing, the more you're going to understand how to do this. But yeah, I hope you guys enjoyed, and yeah, I'll catch you in the next one. Peace.